Compounders, Brad here. So it is that time again, Q&A weekend, okay? Now I did it a little bit differently this week. I wanted you guys to ask your kids or your friends' kids, what do you want to know about investing in the stock market? So it should be a fun episode this week. Let's dive into what you guys asked. Okay, investing with Frank. What essentials should children learn about investing at school? Well, I go back to the two things Warren Buffett says about what he would teach if he were teaching an investing course. The first one is how to value a business. And I like Joel Greenblatt's book, The Little Book That Beats the Market. It talks about how you would value a lemonade stand. So a very digestible example for kids. So that's the first one, how to value a business. The second one is how to think about market psychology, right? I mean, the things that drive the market are humans, human emotions, the way we think as human beings. That's really what makes up Mr. Market. It's a lot more kind of psychology than it is rational thinking, valuation-based type work. So that'd be a great start. How to value a business and how to think about market psychology. In terms of valuing businesses, again, that's probably one of my favorite books around valuing businesses, Joel Greenblatt's The Little Book That Beats the Market. And then how to think about market psychology. I love Howard Marks for that. He's just such a clear thinker when it comes to market pendulum swings and how to rationally think about where we are in the market. So some recommendations there. Why don't you always just buy things on sale? Why doesn't everyone do that? So David, you've done a great job with your kid to instill that in them. It's like when we're going to buy a hamburger, right? The less a hamburger costs, the more excited we get, right? Because we know what a hamburger does. It's going to fill us up, right? It's going to give us nutrition to get through the day. It's a little bit harder in the stock market because the rewards of investing in the stock market are not immediate, okay? It's sort of a delayed gratification where you're putting down something today in hopes that you're going to get back more in the future. This applies, of course. If prices come down on a business that you want to own, that should get you excited. The problem is a lot of people don't understand the business behind the stock, okay? And so they look to Mr. Market. They look to the price movements to guide them on what they should do. If the market decides, okay, this stock is worth more today than it was yesterday, a lot of people who are investing in that stock get excited, right? They look to the market price as affirmation for the decision that they made to buy. And that's really the wrong way to look at it, at least in terms of a value investment perspective. So I don't know. I think if everyone did this, looked for sales, well, first of all, it'd be a lot harder for me to find deals. But it's just not how people think about investing in the stock market. Most people, value investors do have that framework. So I love that question. It's such a great question. It's such a thoughtful question from a first grader. I hope that first grader, David, I hope your first grader has made at least their first investment by now. I have a feeling they're going to do quite well in the markets. If we followed Nick Sleep's advice and invested in Amazon, Berkshire, and Costco at today's prices, do you think we will beat the index in 10 or 20 years' time? That's a great question. Certainly it's not Nick Sleep's advice to buy these three businesses today. He advised that back in, I believe it was 2013 or 2014. So, and to be honest, Nick Sleep sold half of his Amazon position back when it was $1,500 per share. I think like 2018 or something like that. He really didn't want to do that. It pained him to sell half of his Amazon position, but it was just becoming too big a percentage of his net worth to be comfortable. I think it was like 70% of his net worth. So, against his will, effectively, he cut back half of that position. As far as do I think these three are going to beat the index from where they are now, that's tough, guys. That's probably in my too hard pile. I certainly don't think they're going to do much better than the market as a whole over the next decade or two, just because there's such big businesses today. But I think it's largely a coin flip as to whether they're going to outperform the market in the next decade or two. If you were to teach children how to invest, in which order would you go? Understanding basic accounting, how to invest, or how to understand businesses in your circle of competence? I don't think you can really teach children anything, okay? If I tried to teach my kid accounting, I mean, granted, he's 2.5 years old, so he wouldn't really even understand the words that I was saying, but I don't think you can teach accounting to someone who's not somehow intrinsically motivated to learn accounting, okay? So probably how I would start in terms of teaching investing to a child is understand what motivates them. What are they curious about already? And, kind of follow that trail in terms of trying to nudge them along towards investing. I remember, Monish Pobre was telling a story about how he picked up his daughter from college, and he was from the airport as she was coming home from college. He was driving her home, and he decided that would be a good time to teach her the rule of 72. Okay, and if you invest at 26% per year, you're going to double your money every 3 years. And in 30 years, you're going to have 1,000 times your money. So, coming up with stories like that can inspire kids to get excited about investing, I think is probably the best we can do in terms of nudging them in that direction. First question, why have you been slacking on the videos lately? Two small kids. Have you looked into Mile at all? So I believe this is Metro Mile, which is car insurance based on how many miles you drive, not just kind of monthly or every 6 months. I haven't looked into Metro Mile as an investment. Give me your quick pitch on it. Why should I look into it? I'd love to hear that from you. Would you invest a portion or all of your children's capital into a fund managed by a famous investor's child? Example, Monsoon Pobre's fund. So Monsoon, I believe, is the daughter that Monish was talking about, instilling the rule of 72 and what happens over 30 years. I've thought about this a little bit. I wouldn't be particularly compelled to give money to the child of a great investment manager. Part of that is, if you know about Monish Pobre's childhood, he was deeply immersed in entrepreneurship. His dad was a serial entrepreneur, and his dad would constantly end up with these companies that were bankrupt, okay? So early on, Monish Pobre got a fantastic education in business, what works and what doesn't work. Pobre was also, I think, probably pretty motivated as a youngster. Didn't come from a family with money, And, Monsoon obviously has grown up in this family where they're not wanting, right? There's nothing there they don't have. I'm sure Pobre, I know he's fairly frugal, even though, he's got all this money in the bank, right? But still, I don't know that Monsoon is going to have that same kind of drive to really make it in the investment world. So I don't think just because she's the child of a great investor that she's necessarily going to have an edge when it comes to running her own fund. So I'd take a pass on that one. Can you give an update on your longevity research and fasting? Yeah, I'm doing the fasting most days, unless I get awoken in the middle of the night. Then it's I kind of give up on waiting until 11 a.m. before my first meal. But I'm pretty well at sticking with only eating between 11 a.m. and 8 p.m. So a 9-hour eating window, and then 15 hours no eating. I'm not currently taking any supplements other than vitamin D. Still digging into. I'm wanting a little bit more robust research on, the benefits of things like resveratrol and NMN and some of these other things. So really, it's just fasting right now. I do want to do some cold plunges. Hopefully, sauna, cold plunge combo. I think there's probably some benefits there. So not too much to share on that at this point. What are your thoughts on Micron and Cerritage at current prices? Well, I'm pretty happy where Micron is. I think it's up around $90, maybe just shy of $90 per share. I bought in at like 34. I think like 2 years ago, somewhere around 2 years ago. So I'm pretty happy with how that's going. I definitely wouldn't be buying into Micron at the current price. And same with Cerritage. I'm happy I was able to buy in around 10. Right now it's around 18. Could still be a deal at 18. You'd really have to dig into what properties they own, how those are coming along in terms of redevelopment. But I initiated a substantial position at $10 per share, so I haven't really thought about adding more at 18. So probably not too much help there, but I don't think I'd buy either at current prices. But I'm also not selling at current prices. That's where I stand on that. How do you keep track of Pobre's moves in stocks he doesn't need to disclose in 13Fs? Well, Ticker Terminal is what I use. It's in the beta version. It's free. I got on for free. I can share a link with you guys to get on for free. At some point, they're probably going to charge for the service, but they haven't yet. And the cool thing about Ticker, I may as well just pop it open real quick so we can see what Pobre, I always do that. We can see what Pobre is doing outside of the U.S. Track investing gurus, Pobre investment funds. And you can see here, the first two are from 13F filings, which means he bought them through U.S. exchanges. And then the rest of these, South Korea, India, Turkey, Japan, and then these last two are in India. So I use Ticker Terminal. And it says here, if we move this down, change in number of shares held, change in number of shares held percentage. And then it kind of shows the date that this percentage took effect. So you can see if he's been buying or selling recently. So this is what I use to track what he's doing outside of the U.S. And, most of the big investors are covered here. So you can see what a variety of investors are investing in outside the U.S., which is fantastic. And each country typically has the SEC.gov equivalent where you can verify what these investors are doing, not just take Ticker's word for it. What do you think about Stamps.com as a business, and can you do a quick valuation on it? I think you might like the stock, one of my stock picks. I haven't looked at Stamps.com. Let me know in the comments of this video kind of your quick pitch for Stamps.com, and maybe I'll take a look at it. Thanks for that recommendation. Off topic, out of Mohnish Pobrai's portfolio, how would you rank his stocks by his confidence in each one? For example, Shinnikin, Micron. So one way to rank confidence, kind of the clearest way, the easiest way, is to look at, well, what is it as a percentage of Pobrai's portfolio? Okay, this holding as a percentage of firm's portfolio. That's as a percentage of Mohnish Pobrai's portfolio. So, it's a bit misleading because Micron, he didn't put in 137 million into Micron. Okay, Micron was probably a 10% bet, probably around 50 million initially. That feels about right, because it's almost tripled since he bought. So, in terms of conviction, I mean, he talks about some of this stuff in his talks at universities around the world. And, Micron and Cerritage, they don't really fit into his new framework of long-term compounders. So it wouldn't be either of these in terms of conviction. Nice holdings, I would say. Racis and Shinnikin. Based on what he said in talks over the last 6 months, I would say those are his three most bullish positions. You can see Racis, he owns about 30% of the business. That's a big deal, even though it's only an 8% position for him, because it's a smaller company, right? I think when he was buying, it was like a 21 million market cap company, and he bought a third of the business at that market cap. So that's what I would say. Nice, Racis, and Shinnikin. Okay, what's next? What do you recommend to use as a cash equivalent? Please don't say BABA or a SPAC at NAV. Well, first of all, I don't recommend things like that. That's not really what I do here. I'm trying to, educate you guys about how to invest. I'm not going to pitch you guys companies to buy that I think you should buy. So yeah, I don't know that I can answer that. I would just look for something that you think has very low probability of dropping, an asymmetric upside to downside opportunity. And it's really based on what your circle of competence is. What can you understand to have that asymmetry? That's going to be unique for each person. Can we get some education on reading financial statements, earning reports, and annual reports? It would be great to have insights from you on it or any other source which can explain so. I'll put that in the hopper. Thanks for that suggestion. One of the easiest ways is find a business that you're really interested in and just read the annual report, right? Get comfortable reading annual reports and earnings reports, quarterly reports. Your curiosity will really make it interesting for you to do these things, to really understand the business. Is Micron a compounder based on the facts that it is the only American player in a worldwide oligopoly? Computer memory storage grows at an average rate of 15% per year with no end in sight, and it has fantastic management. Is it a compounder? I don't know. I mean, that's the short answer. I probably won't hold it for more than 5 years. That's my sense. So I don't think it's a compelling long-term compounder from where it is now. I don't think it's going to be a 100-bagger from here. So that's my plan is not to hold it for decades. What is a hedge fund? How does investing benefit you? Okay. So what is a hedge fund? Typically, the name hedge, when it comes to hedge funds, it's usually a long short. Okay. So the company buys a bunch of positions that it thinks is going to go up, and then it'll buy some positions that it thinks have a likely chance of going down. Okay. So in that sense, it's hedging. Okay. If the market goes up, that's great. It's got all those long positions, all those bets that those companies are going to go up. If it goes down, it can also make money with the short positions. Okay, so it's hedging that no matter whether the market goes up or it goes down, there's gain to be made, or not necessarily gain if the market goes down, but less losses. Okay. So you're hedging your bets in a sense. A great example, Bill Ackman really hedged his fund last year in March when he bought credit default swaps. Okay, he was betting that a lot of corporate debt was going to get into trouble. Okay. These businesses weren't going to be able to pay the interest on the debt. And so he made a bet that was going to happen. And when this pandemic came into full force and the market just started tanking, Bill Ackman made out like a bandit. Okay. It was a $27 million bet. That's what he put into it. And his fund got $2.6 billion. Okay, from that bet. It was almost 100x on that initial 27 million bet. And the beautiful thing about that is he got that 2.6 billion at a time when a lot of the stocks in his portfolio were cheap, right? They had just crashed about a third from where they were the month before. So not only does he have this 2.6 billion right away, he's got places to put it, to invest it. Companies like Starbucks, like Howard Hughes Corporation. I believe he owns it's either Lowe's or Home Depot. And he plowed that money in to those businesses. And if you look at what Pershing Square has done over the last year, a little more than a year now, I think it's done incredible. It may have doubled in the last year. So very impressive. How does investing benefit you? Well, I like what Charlie Munger says about this. Charlie Munger never set out to get rich. Okay, he doesn't care about getting rich. It doesn't mean anything to him. He set out to be independent. Okay, to be able to do what he wanted to do each day, to be financially free. And that's really my goal with investing, is to be able to do what I want to do in life. Not a 9-to-5 job, not doing what other people are telling me to do, but to have the freedom to decide how I spend my time for the rest of my life. That's really the benefit, as I see it, to investing, to learning how to make the most use of this compound growth engine that is investing, intelligent investing. So thanks for those questions. I'm 16 years old and have no background in investing. That's awesome. Okay, you haven't been contaminated by efficient market theory or any of these rules of Wall Street that everyone takes for granted. So this is a fantastic position to be in. What should be the 3 topics that I should learn to understand basics of investing? Well, I already alluded to them earlier. The first one, understand how to value a business. Also understand, this is part of understanding how to value a business, that 99% of businesses out there, you won't understand well enough to be able to value, okay? And that's perfectly fine. There's 50,000 public companies in the world. So if all you know is how to value 1%, that's 500 companies, right? That's plenty. If you can value 500 companies, you're going to do very well. If you have the patience to wait until they're on sale, they have a significant margin of safety. So it's not a problem. It's much more important to stay within what you know, to be honest with yourself about what you know and what you don't know, than to, look at thousands of businesses trying to figure out which one might be best. Figure out how to value a business, learn how to value a business. And probably the best for this, read Nick Sleep's letters, okay? First, read Richer, Wiser, Happier by William Green. It's a book I'm reading right now. It just came out. Chapter 6 is Nick Sleep. So Nick Sleep had some incredible insights managing his fund over, I think, 13 years. You have such a head start if you really integrate what Nick Sleep learned over those 13 years of managing a fund. Second topic, understand market psychology. Understand human psychology. These are the participants that make up the market that we're playing in as investors. So the best way to learn that is to start, okay? Start investing. Give yourself a month to decide, okay, this is the first company I'm going to put some money into. It doesn't matter how much money, as long as it's something, it should be something that, it's not like $1. It's something that you'd feel a little uncomfortable losing, okay? But put some money into that company. And then once you've done that, you're going to learn a lot about yourself as you watch the price of that stock go up and down. That's going to teach you about your own psychology as an investor. And it's really going to help you understand investor psychology of the market as a whole. So that is a critically important concept. And the last one, understand that if you have the patience to hold a great business for a decade or more, you are ahead of 99% of investors in the stock market. It's really, what does Buffett say? The stock market is a way to transfer wealth from the impatient to the patient. Just got to refresh this feed here. So that is everything, guys. Patience. Charlie Munger, another investing genius, says, you don't make money when you sell. You don't make money when you buy. You make money by waiting. Okay? And you're going to learn about this from Nick Sleep if you really dive into his stuff, even if you just read chapter 6 in Richer, I forget the name, Richer, Wiser, Happier. So thanks for the question. I'm excited for you. 16 years old. I wish so bad that I had started investing at 16 years old. And I hope you inspire some of your friends to start investing as well. We need more people who start investing at that age. Are there any actual funds who just basically clone other institutional investors, like a fund who clones concentrated value investors? That is a great question. I know that they're out there. I haven't studied any of them. I probably should. I should probably do that because I do have ambitions to start a cloner fund someday. I know there aren't many, if there are any at all. There was a talk There was a talk Pobre gave at Ivy College back in 2014 or 2012, 2014 or 2012. And I think in the comments of that talk that Pobre gave, there was some information about Kaellner funds that are in existence. You could probably find that information on Corner of Berkshire and Fairfax as well. If you just ask that in one of the threads related to, starting a fund, people can probably point you to fund managers who took that approach, the shameless cloning approach. So I think, 100 Baggers, Chris Meyer talks about this as well in some of his blog posts. His blog is Woodlock House Family Capital. So you might be able to find that, cloner funds. But yeah, thanks for the nudge. That's something I want to research again, because that would help me kind of think about how to craft a shameless cloner fund. Awesome questions, guys. Thank you for all these questions today. For any of you kiddos, I encourage you, keep coming to these Q&As, keep asking questions. I'm collaborating on another channel with 4 other YouTubers. It's called Punch Card Investing. We're getting together once a week on Friday night to talk about different things. We've talked about our favorite investing ideas and our favorite investors to get ideas from in the first 2 episodes. We've only done 2 episodes so far. So for all of you, check that out, Punch Card Investing. I'll leave a link to it in the description for this video. But this is exciting. I'm going to do more of these Q&As targeting kids and what they want to know about investing, because they have such an advantage over people who are my age. When it comes to compounding, rate of return, kind of compound annual growth rate is a huge factor, and time, length of the runway is a huge factor. And so people who are decades younger than me, if you're 11 years old, that's when Warren Buffett bought his first stock. You have such an edge over people who are just getting started in their 30s, okay? Or even 20s. So I really want to get this message out to people who are really young, because it's exponentially more valuable to them as it is to people like me. Anyway, guys, thank you all for being here, and I will see you in the next video. Take care.